Good morning, everyone. Welcome once again to Rally Academy and the morning market review, where we make profit daily. My name is Victor, and I'm going to be your host for this morning's review. So, just think we have some number of persons here. Let's just allow a few more persons to join the call before we really start. So, let me see. Okay. So, hold on. Okay. Good morning, Mr. Kenny. Morning. So, good morning, Mr. Binka. Good morning, everyone. Okay, so let's see what we can do this morning. Here. Just a moment. All right. I think it will be best we start with our fundamentals. Mr. Felix, it's been a while. Good morning. Okay. I think it's best we start with our fundamentals for today. And it's always good to take note of those externalities. So basically, the fundamentals are the externalities that we have. So those things that are not on the chart, but obviously they have significant impact in the market when we study them. So now all of these things, we need to take note of them. So these are forest factory now, and for our fundamentals, it's more for the Asian session and Sydney, which is early this morning. We had that Australian dollar CPI, which was good. So we really expected it to be good as at that time. 4 a.m. NZD, official cash rate, monetary policy. This is more like the, what do I call it now? Interest rates, which was the same. They didn't increase it, neither did they reduce the interest rate. So this is neutral. In this instance, most likely we stay out of the market because there's no direction. It's neither strong, weak. And the same 5 a.m. Okay, the press conference. These are not data. Okay. Now, what we are going to be watching out for is FOMC for today. So today is FOMC. That's 8 p.m., but I'll advise you 7 p.m. Right? We are not waiting for 8 p.m. Like daylight saving, so it's 7 p.m. Nigerian time now. We're going to experience some volatility in the market, you know. So this is more like the guys in charge of setting interest rates in the Federal Reserve for America. So the Federal Market Committee. So these guys, they look at the way the situation of the economy, they consider the factors, they consider the the what do I call it now? The inflationary rates, and they come up with some fiscal policies in order to combat the inflationary rates, as well as seeing how they can improve the dollar. So they set interest rates. Now, these guys, this is not a data news, all right? They're just going to give us the minute of their conclusion, their meeting, what they are thinking of doing, all right? So it's a speech, but it affects the market significantly, all right? So by 7 p.m., that's what I. So I think we are mostly clear, except for 4 p.m., Richmond Manufacturing Index. We are mostly clear to trade technically today. So back to our charts. Yes, my long-awaited USD JPY is finally playing out the way we wanted. All right. So USD JPY, it has been So let me ask you now. So you see all this movement like this? Are we going to say that USD JPY is an uptrend or a downtrend? With what I'm showing you now. This is an open question. I need answers, please. Uptrend or downtrend?
Overall uptrend.
Okay, that's good. Any other opinion?
It's a downtrend. I think it's in a retracement.
It's a downtrend.
Yeah.
Okay.
No,
All right.
I think
But
on my
then
own
the
part,
retracement.
I'm not saying that.
Yes. Any other? You know what? Let's just do it with. Just type it up or down. Just if it's uptrend, right? Up. You can do uptrend. If it's downtrend, just type down. You know, I would appreciate that. You know, what you are seeing here. Let me zoom out a bit so that you see it well again. Meanwhile, I'm on a 1 hour time frame. I'm on a 1 hour time frame. So the current trend, what is the current trend? Okay, let's see. Uptrend, up, broken structure, overall uptrend. Okay. All right, so people are doing cheat here. Okay, let's dive into it. Overall uptrend, up. Okay, good. I think a lot of you have attended my market structure class. A lot of you have attended the market structure class, I think. All right, so yes, you are right. You know, so there's a saying that the trend is your friend until the bend. Now, whatever I'm telling you now, you can apply it to almost anything. But when it comes to gold, you need a little bit of more information, and indices, a little bit of more information. But currencies, trust me, they look like the simplest to trade, the easiest to trade, the easiest to trade. Okay. 100% retracement. Okay. Okay. Look like some people have listened to, or maybe you've done your job, you've done your due diligence, right? Right. Okay, so if I'm to start from all of this, breaks the resistance successfully and it's trade up. Okay, so let me do it this way now. If I'm to zoom out, you said the trend is your friend until they bend. That statement is a very significant and a tradable statement. Right now, what does it mean? I'm on a 1 hour time frame and I've zoomed out. Now you notice that on your lower time frames, like or your intermediate time frame, like 1 hour and 4 hours, the trend tend to shift a lot, but it lasts for a few days, few weeks before it changes, right? So what do I mean? I mean price was on a significant downtrend, massive retracement, downtrend, became an uptrend at this point, became an uptrend, right? Now later again became a downtrend, downtrend. Now inside of the trend, you are going to see some retracement. Some might be short, some might be significant retracement, as long as it doesn't break structure, right? Then continue its downtrend. Now it's uptrend. Okay, uptrend. Now, how do you trade all of these trends? Simply, your market structure gives you an idea of where to enter, where not to enter for your trade. So let me just simply do it this way so that you can apply it to as much as you can to trade. My goal is for you to look at the market and be able to take your trades yourself. Okay,
Don't bother yourself, I will use prayer to spread them.
applying some simple tricks. Please, I'd like everyone to mute. Okay. All right. Okay, so now all of this downward movement that USDJPY has been doing, it is just retracement. It's a correction. A correction goes against the trend. It's a massive one actually. Okay, but irrespective. Now, see, let me bring you up to speed. Let me bring you up to speed, right? So this, so it said that the trend is going until the bend. Now, where is it? Previously it was down, right? And before it stopped going down and started going up, right? Now here, started to go up, isn't it? So this is the lowest point. This is the lowest point. This is where I have my bend. So this is how you use that statement, okay? Notice all through down, 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 right? Down, 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 down. This was the lowest point it got to before it changed direction to the up. So this is where I start from, my bend. Now I start from here, big market structure, which is my swing high, my swing low here, my swing high here, right? So which is here. Now this is a correction. This is an impulsive move in the direction of a new trend now, and this is the correction, right? So it means that we are looking out for buy trade, right? So price did a buy. Now it broke structure here, but not significantly. So this still remains. It came back inside, but now pushed higher. Okay, so this is now our new high, and in that retracement, this is the lowest point of our low. So this is our new trading range. Price did another correction, which is retracement. Now notice our trading range here is not wide; it's small, small, right? Now price finished retracing, worked its way up. This time around, took out the high, gave us a new high, isn't it? So this is our new high. In that retracement, this is the lowest point, which forms our new low, right? So this is our new low. Now notice that this range is wider than the last two previous range. Price came up, did some good retracement again, went up again, gave us a double top, came down and took out this market structure, took out this high to give us a new high. Good. Now notice the retracement, this is the lowest point which forms our new low. Good. Now this zone is even way wider, like very wide. Hence, market has been correcting itself, retracement, impulse, until where? Until the end of the zone. So you are right, Mr. Kenny said 100% retracement. This is 100%. It retraced completely, right? Before and after doing this 100% retracement, with price pulling up now, what do you think price should be doing for the next couple of days? Should price be going up? Should price be going down? What do you think? It's an open question. It's an open question. This is just simple. If you can understand market structure, then you can predict if market moves a certain way, you can predict if it will continue or if it will most likely return. Yes.
So for me, if price switch the low just a little bit below, just set some inducement and then closes upward again, then we'll continue going up. But until that happens, I will just watch what price do. If it closes upward, then we can engage.
So you are waiting for price to pull up again and close, let's say, above this particular internal high that it has created.
Yes, but before then, it must first of all sweep the low, finish the business with the low. That's the under it. Just like to do a manipulation under and then close up above what you have drawn.
Okay, you mean this low?
Yeah,
or...
yeah. Create a manipulation there for me and then closes up.
Okay, all right. Okay, so let me see what others are saying. Up, buy opportunities up, maybe a retest first. All right, yeah, good morning, please. Yes. Please
I
go
think
ahead.
there has been a change of character there. Yes.
Okay.
Yes,
The change of character is now an uptrend or down?
It's uptrend now. It should be uptrend. Yes.
Okay. It's still an uptrend actually. It has not broken. We don't have a change of character. So this is not what we call change of character. This is break of structure actually. So,
okay.
A change of character is different from a break of structure. A change of character happens against the trend. A change of character is now a reversal. So if we're in an uptrend, okay, let me put it this way now. Let's say this was our low, this is our low, and this is our high, right? And if it happened that price continued down and breaks below this low here, then that is a change of character. So mostly you see it as CHOCH, change of character, which is price is no longer in an uptrend, it's now a downtrend. It has broken below our range, right? But if price still in an uptrend breaks an internal high, a previous high, probably to create a new high, it's a break of structure. Break of structure is still aligned with the trend. Change of character is now against the trend. If you get that. So what do you think? Do you think it will pull up or pull down? I just have to correct that. Okay. All right. So yes, I don't know your name that spoke earlier, but we are all right. Now, price is in an uptrend. It's obvious that downward movement is over, right? We look for a buy opportunity because okay, so we start looking for buy opportunities. This is where both swing traders, day traders, and scalpers start to look for where they want to take advantage of the market. So for scalpers and for day traders, right? Scalpers, day traders use lower time frames. So for instance, a day trader possibly would have taken another buy at the retest of a moving average, another buy at the retest of moving average, although it looked like it broke a little, but still came back up. Scalpers with your, let's say, 5 minutes time frame would have been taking buys. The moment it broke, would have taken another buy here, would have taken another buy here again. All right. But we that want to stay a long time in this market buying it, yes, a buy is good, but someone said we need liquidity. Yes, liquidity is like the blood of the market, what fuels the market to move. So for price to pull massively like this, there was significant momentum. Now, for it to slow down, it needs more momentum to keep pushing higher. So we need to look for areas where we have liquidity. So we have liquidity around this area. Their liquidities are just places where you find price ranging, especially below support and above resistance. So since we are pushing higher, we are looking for support to buy from. So we have liquidity around this area. So if price can push down a bit, moving average is stopping it, then we can keep pushing higher, all things being equal, right? So that is for USJPY. In the long run, I expect price to keep pushing up and get to this high. It's not going to do it in 1 day. Might not even do it in 2. It's going to do it over time. So for the rest of this week, I expect price to keep pushing up to this high and even possibly take out the high to create a new high since we are still in an uptrend, right? So that's for USJPY. We're going to be bullish. Now you can apply the same thing to almost any chart that you are trading. Almost any chart that you are trading. Any chart. Almost any chart you are trading. All right. Our NZD USD also. This guy still an uptrend. Okay. That's changed to become an uptrend. So what we are looking for here is also buy opportunities. Now, price has obviously climbed above our moving average again. I'm so sorry. Let me change my moving average. I have the one I have 3. Okay, good. All right. So yes, our NZD USD, we keep pushing higher and higher. Let me see where we had our previous low. Okay, this is the bend. All right. So this is our low. This is our high. High was tested again. After this retracement, came up, pushed higher, got to high, took out the high to give us a new high right here. After which our low was just slightly above here, around here. Okay, so we had a very massive range of which price just took out, after doing some retracements, now it's back above. So price is expected to keep pushing higher. Worst case scenario is price might just retest this level again in order to gain some momentum. Price might just retest this level to gain some momentum, but NZUSD We are also looking at being bullish, right? So looking at being bullish. We are in an uptrend. So it's hard to go wrong. At least 70, 80% odds is in our favor. The only 30% is for you to find your entry point. That's all. Find your entry point. I can tell you for free that if you enter a buy, even at current market price, there's a 50% chance price might go right now. If you enter a buy at this level I marked, there's a 70% chance price might go right now. Now, the remaining is price might decide to come all the way down to do a full retracement, just like our USJPY. In that case, you will have some drawdowns, like negative for a while, before price come back and take you out of that negative and bring you into profits, right? So that's why I said there's a 20-30% chance. That 20-30% left is for you to find a good entry point to take. If you don't find a good entry point, you most likely have drawdown for the while, but you will still get out of that drawdown, right? So if you are trading the direction of the trend, ordinarily, you should be good, right? You should be good. If you can mark out your market structure, I think we need to go back to the basics, all right? I have something right here. Let me see. You need to go back to the basics. Let me just tell you this stuff. Just a moment. Okay. So the truth is that most traders don't lose money because they are bad at trading. That's the truth. It's not like you are bad. I'm sure a lot of you have some knowledge. And that knowledge is enough, sufficient to make you profit. But your execution is the problem. Okay, so they lose because they are trading to being right. You are trading to being right. You are always trading to be right. If you always want to be right in this market, 100% of the time, then there's going to be a problem. Just know this and know this. Know this, that you can never be right 100% of the time. Now, by right, I'm not even saying that you should go negative. What I mean is, I said, if I take a buy from where current market price is, yes, it's still a buy, but I might be wrong in my entry, which is price might come down. So there's a 50% chance that price will go up from here. Why? Is almost at the middle. If I take a buy from here, which is lower, there is a 70% chance that price will go my way, which means there is still a 30% chance that I might be wrong in my entry, right? So if you are always looking out to be right 100% of the time, what will happen is you miss a lot of trades. Trades will pass you by. I'm sure you've seen trades where you saw a buy opportunity, you wanted to buy, but you were too scared to buy because you feel if you are wrong, what will happen? You didn't buy, you came back a few hours later, you saw that price actually bought massively, and you would have made some good profits, right? It has happened to traders a lot, and that is fear of being wrong. So how do you help yourself? Just look for a good strategy. So you cut your loss, you cut your losers, you double down when you shouldn't double down. So for instance, if you place a buy here now and it's not buying, it comes down here. If it just shows you one small sign like you wanted to start buying, you place another buy again, like 2 or 3 buys. Now, if it even pulls down further, like down here, you place other buys again. What if market was to do a full retracement? Now you are now over leveraged. You have so many buys. Your account cannot hold on to that trade. The negative is too much because of your multiple entries. And before it could get to the low and reverse, it has cleared you out of the market, right? So sometimes you don't just double down on the market like that, all right? So don't ignore the rules. There are certain rules. There are mechanical rules. There are structures that you can actually follow in order to trade this market effectively, all right? Just find a strategy, refine that strategy, the same setup, execute when the market gives you that signal to execute. Have the same mindset, keep doing it over and over. You will find an edge, it will play out, all right? It will play out. It might not be easy, it might not be sexy, it might not be rosy, but this is what works for the long time. If you ask those who are really, really making money in this market, they will tell you that time they get into negative. There are times they enter the trade, it looks good, but it doesn't go their way immediately. So what do? They close out they take out their loss quickly. But if they know that the account they have can take it and they can wait for it, then they do so. So please, these are some of the reasons. Hence, I'm telling you now that if you buy, because I know some people would enter a buy here, just know you are doing the right thing, but your timing might be wrong. You might not, there's no perfect strategy to getting your timing 100% right. We are still at the mercy of the market, but we want to put ourselves in the position that whenever the market is ready to move, this is the direction it should move, which is up. So if I'm in the market, if the market is ready to move now, I'll make the profit. If it's ready to move in the next 30 minutes, I'm there. I'll make it. If it's ready to move in the next 1 hour, 3 hours, 5 hours, whenever, I am in the right direction, right? So that is what your market structure helps you to do. Okay, so now NZUSD also, we are looking at being bullish. You can just count through different currencies. That's the sweetest part, right? That's like the sweetest part. Okay, so hence this one also. Let's see if it's still up or down. Okay, clearly it broke market structure, and it should be down because this is our fib. It broke 100% to this level, so we should be down at the moment. So let me take out all of this mark. Okay, so this is our, excuse me, I'm just trying to mark my structure here. This is our high, this is our new low. Our range is very wide at the moment, like very wide. Now someone asked me, why is my high there? And why is this not my low first, taking up my new high, my new low? No, we work with the previous range. Now you'll notice that the previous range was very wide. This was the previous range. This was the low, and this was the high, right? So price has taken out this low to this point, and this is the high it started coming from. So we let the high remain the same. We only adjust our low to this point. So that's why you can't find your low here, right? Your low has to be here. So the retracement for USD CAD is possibly going to be significant. So what we do is we look for areas of discount and premium. If I apply my fib from swing high to swing low, let me put it this way, swing high to swing low. Now, anywhere below 50% is discount, which is buyers are interested in buying. But because we want to sell, price should become a downtrend now. That is why we would like to sell anywhere above 50%. So price is yet to get to 50% and above. So we are still waiting for USD CAD to pull up a little more before coming down. So if you ask me, where is price most likely to start retracing from? I would say from this level right here. Okay, from this level right here. What I don't expect price to do, what I don't expect price to do is to keep going up and take out this high to give me a new high. If it does that, market structure, that's change of character. We are now in an uptrend again. Okay, so like I said, we are at the mercy of the market. Hence, I'll not be looking out for sell. I will be looking out for buys, right? So that's for what's that? USD CAD. Let's see Euro USD and the likes of it. Then before we go to our good, okay, GBP USD. All of these ones are not going to open. Okay, here. So I have Euro USD right here. So Euro USD rather has been, let me see. Has it broken market structure? Yes, it has. So we are now, yeah, we are now in an uptrend for Euro USD. Okay. So where's our low? Excuse me. Your ability to accurately do market structure helps you to win. So let me just, one of the easiest way to do it is to look for your bend. All right, to look for your bend, okay? There are times where your bend can be effective. There are times where, in addition to your bend, you want to know the last range So you'll be correct to know when market has broken structure, right? So let's say I really like to know my last range. Okay, so if I have this as a high and I have this as a low, then a very wide range. If you're just patient with me, I wish there was enough time to show you exactly what I'm talking about. Market structure is king, trust me. Once you get market structure, you have 50% there. The rest is just to know where to take your buy from or yourself. Okay, so these are new low. These are safe. So anytime market should start pulling up again, right? So that's why I said timing. Timing. Okay. So price broke this one to give us this new high over here. And where would our low be? Our low is very much up here now. This is the lowest point of retracement before price continue pulling up. Okay, so these are range. Now, what were we expecting? We're expecting that any moment price should pull up, right? Price didn't pull up until it got to almost 100%. We're expecting to pull up. It didn't pull up. So this one broke the low now, which we have a change of character. Now we are a selling spree, right? So price, this is our low right here. So we start looking out for sell opportunities. Okay, so we are still in that sell opportunity. Okay, so Euro USD, sorry, we are not in a buy, we are in a sell. This is why you should not just look at what's happening, trace it backwards to know where you are currently. So Euro USD, we are back, we are in a downtrend because market broke structure from here to this low. So we expect retracement, then we expect a sell. Now price has broken below moving average, so I expect that price should keep selling all the way to this low, and it's going to sell for days. So Euro USD, we are bearish. All right. Now, there's a way we can help our timing. Our timing can be to locate areas of liquidity, areas where there is money, because market moves based on liquidity, and liquidity is money. So to locate those areas, so if you are to locate those areas, there is one here. There's one here, which coincides with our moving average. There is another one right here. Oh, this one is a massive one. This might serve as inducement for this other one. There's this wide one right here. Okay. And lastly, there is another one here. So whatever price does, our expectation is price should pick one of these areas. So if I sell from here and doesn't mean I'm wrong, means price is not having enough liquidity there. It wants to pick more. It goes into this range, picks more liquidity and come down. And if still feels that liquidity is not enough for it to further downward movement, it goes as high as this point and pick it. In the long run, we will still be in profit if you obey this rule. Rule one, if you are buying from here, if you are selling from here, and price goes inside of this point, since it's not far, you can wait for it. All right, you can wait for it to come back to your entry point. Because if you start to double down, triple down, you start adding more sell, because from here, there's obviously going to be a little bit of reaction. And that reaction might look like price is starting to come down. So if you now say, oh, let me add more sales now, like 2 or 3 more sales, so that I will quickly be in profit. What if price decides to go as far as this point? So this is where you are putting your account at risk. It means that the negative will be so significant that your account might feel it. Your account might, and if you don't have a sizable account, that is where it becomes so dangerous that you will not be able to hold on to that negative vis-a-vis the balance your account. So you'll be forced, either you'll be stopped out of the market or you'll be scared and you start taking out the huge negative you have, right? So I would suggest that if price goes here, don't double down. Allow it to come back. If it goes here, worst case scenario, you can double down from this point. It's better to double down from this point, to have another sell at this point, all right? Okay, so that is my old setup. I will take another one if it gets to the extreme point. So Euro USD, we should be bearish. One more instrument Wow, this is already 8:41. Okay, so let's just quickly go to our gold and the likes of them. Okay, so we had some significant sales in gold yesterday. Please, everyone, mute. Okay, that's how just mute. Okay, maybe a retest first. Okay, we keep looking for buy opportunity because there is even a. Please make sure you are mute. Please. Okay. So just says Farmer Roti. Is there any way we can create a special class on the understanding of market structure analysis? This might just be the missing link. Trust me, this is the missing link, not might just be. You would be shocked how Techno be something.
So you can mute everyone, sir. Mute everyone.
I have mute everyone. I don't know how this one just keeps on muting. I don't know how. Like, is there any way you can create a special class and understand market structure analysis? This might just be the missing link. Like I said, it's the missing link. Like that is the missing link. You'll be shocked how good you will start finding your entries when, or how clear the market will look when you know your market structure. All right, when you know your market structure. Yes. Okay. So before the end, I'll just let us know. Let's see if we can create a special session special class for market structure. It's not popular, but trust me, simple is in this market is best. No complicated things. All right. The person saying, no, we have a change of character, break of structure, save liquidity. I don't like to use all of those languages as much as they are right, but these are bogus language. Yeah, Francis, Pastor Francis. Yes, please, you can unmute and go ahead. Yes, please go ahead.
Good morning, Mr. Bolarin.
Good morning, sir.
Sorry, I don't want to ask a question per se, but last week you put out on our waiting list. You said we're going to do a class on Sunday, and we waited all. I even sent you a message. I tried calling. I don't know what happened.
I'm so sorry about that.
Please, let me tell you something. I enjoy your class. I'm not saying others are not good, but your class seems to be on a top notch. So please, don't go far away from us. I beg you.
Noted, sir. So before we finish, I'll drop for those who would like to join. So I'll send the link so we can have this weekend, possibly. No, not even possibly. Definitely. Might even be this market structure so that you can understand this easily. All right, so you can understand it.
Sorry, sir. And you also said you were going to send us 3 videos. I don't know whether you forgot or you didn't have time.
3 videos?
Yes. On that, so that we can watch and rewatch and rewatch.
Oh, it was you people. Oh, I thought it was another set of persons.
No, we were the one.
Oh, so sorry about that. Okay, all right. I will do that, but there are 2, not 3, 2 of them.
Okay.
Yes.
Thank you, sir.
Yeah, you're welcome, sir. I appreciate Mr. Kelly. I appreciate. Thank you so much. Thank you. All right. So, this is GBP USD. You know, this I want to do gold. Okay, this is gold. Oh yeah, this is where like I said, this is a 4-hour time frame. I mentioned that currencies are easier to trade, but when it comes to gold and indices, you need a little bit more of information. So, for instance, if I'm to do my market structure for gold, I wouldn't do it on the 1-hour time frame. I would do it on 4-hour time frame. It's best. It's just for my entry to at least, how would I put it now? For me to have a better entry. The problem is not you buying or selling. I'm sure you've had a lot of times you've bought. Price went down first. You were in some good negative. possibly immediately you closed out or it closed you out or you were scared, then price started to reverse, or you were in that negative phase, you held on to it, later price started to reverse, and finally you got out of that negative. So that is, gold is very volatile. Indices are even much more volatile than gold. So with instruments that are volatile, our main job is to get our entries right to an extent, all right? So that's where the job becomes much more, a little bit harder than currencies. Currencies are slower. You know, the negative will not just kill you, but gold, you'll be shocked the moment you enter. Even 0.01, 0.02 can be catastrophic. Let me use that word. All right. So now, what do? I have my market structure. This is the most recent low and the most recent high that was marked. And remember, I said for us to be in an uptrend, we want to be buying, and buyers always look for buys at premium, discount prices, which means low price, which is anywhere below 50% of the fib, anywhere below 50%. Okay, so the moment price steps below 50% and it changes, pushing back to the upside, then I want to be looking for buy opportunities. I want to join, or at every single good retest, I want to buy. And the aim is to go back to this high, to do a double top, or to even possibly take out the high and give us a new high, which will most likely be a new all-time high. Yes. Yes, which will be a new all-time high. All right. All right. So now, price went up, couldn't get there, came back again to this 50%, looked like it was going. So this is where our entry. So if you join here, you notice you will have some good drawdowns. So sometimes we close the negative and we wait for it to get to another level before we start again. So it got below like 61.8. If we're talking about Fibonacci, we are not talking about Fibonacci in this class. So price reversed again, retested, and is pushing up. Now, what do? I still expect price to go up because price has not broken below my moving average. Okay, so I expect price to still push to the upside. I am just looking out for areas where there are liquidity and hope that liquidity will be enough for price to pull up. So there is liquidity around this area. There's liquidity here. Price has just taken liquidity and is on its way up. So guys, in my own opinion, price is ready to keep pushing up again. Price is ready to keep pushing up again, and you see that the distance is still far. The distance is still far. It will still push up significantly. So a buy is in order for gold. We are still bullish. We are still bullish. We are in an uptrend. You have the odds in your favor. Your entry might just be what is wrong. Right? So, but this is still a good entry. Worst case is you can have your stop loss below this level. Below this level, right? So in case it goes below this level, you know that it's looking for liquidity next. And where do we have that? We will have that around, which is very significant. We'll have that around this level. So I can't wait for price to give me negative up to here. This is good. It's very volatile. Even 0.05 can kill somebody, right? So I would rather it takes me out here. If it gets here, I buy again. And the good thing is that the distance between here and here is very massive. So I will recover whatever I lost if it doesn't do this. So don't try to be right 100% of the time. Just follow your strategy. But have a risk management in place. All right. If it's not going your way, you can tell yourself, if I have 500K in my account, I can only reach 20, 25K. I take it out. But you should be able to identify the next area price is most likely going to respect in that case. For me to take it out, I am still waiting for price. So if I do that, I should be able to make back my money, right? So if I have two back-to-back, I just rest. Probably market want to change character, becoming a downtrend. So we are still in an uptrend, so if buy is still in order. And if it doesn't buy, if it goes down, if you see for any reason, gold goes down, if it can get back here, it will start its way up again. But if it breaks here and goes below, I would advise you to just close it. Let it take your stop loss. It will massively go down. Like today will end massively bearish if this happens. And this will be your next point of interest for you to take your trade again, right? Whatever will make gold go below 100%, below 100%, then there's fire on the mountain, okay? Now I'm using the fib of my 4 hours. I'm just using my 1 hour to take entry. I'm sure a lot of persons have entered the trade already, okay? You're welcome, Mr. Victor. You're on it already, you're on gold already. At Kenny, I didn't get it. Mr. Kenny, can you tell us? I don't get it. Is it that you are already buying gold approaching 3 figures? Okay. So this for gold. Let's quickly just look at the US 100. Josephine, I saw your hand raised. I saw your hand raised. Is it that you want to say something? If you want to say something, please raise your hand so I can unmute you. Okay. Oh, yeah. Oh, okay. That's nice. That's nice. That's nice.
Fine, sir.
All right. Yes, please go ahead.
Okay, I wanted to say you should help. I wanted to say you should help us analyze the US 100, but you just made mention of it. That's why I lowered my hand.
Yes. Okay. All right.
Okay. Thank you.
Let me do that. You're welcome. Okay. So US 100. Let me just look for it here. US dot 100.
Just
Okay. Techno BG6, please, for the sake, I don't know why, I don't know how yours keep muting, but it's too frequent. Please just help us, please. Just help us mute it. With US 2000. This is on another level. I'm sorry, I have no option than to remove. Okay. All right. So I don't think we'll have that issue again. Where's our candlestick?
What is the period of your moving average?
You said what?
The period of your moving average, sir.
21 and 50, both exponential. The red is 21, the green is 50, and they are both exponential. EMs. Not simple, not linear, not weighted, but exponential. Okay. And the shift is also 0. So if you see, this is a setting, you can screenshot it. 21, shift 0, exponential, not simple, not smoothed, not linear weighted. Typical price HLC/3. I'm using red color for 21. The same thing for 50, the same setting. All right, this is my moving average settings. Okay, so for US 100, now US 100, unlike our currencies, that is a function of the economies, what this economy is doing vis-a-vis this economy, why is it strengthening this vis-a-vis that. These are companies. When it comes to US 100, these are companies, and they're always looking out to do well, right? They're always looking out to do well. Hence, you can have sharp upward movement, sharp downward movement. Supply demand works a lot in indices. So, like I said, I use my higher time frames, like 4 hours also, to look out for my market structure. So now you can obviously tell from this massive downward movement that we had a change of character to the downside, right? Because this one alone broke structures. Our last low was here initially, and the last high was here first. Okay, yeah. So the next high was here. because we took it out. And the last low was around here. So this one clearly took out our highs and lows and brought us to this level significantly. So our high was now here. All right. So it continued another downward spree. Now later we now have, okay, so let me complete this move. So this level to this level. Okay, so from this low, now we were expecting that price should keep going down, but unfortunately it turned and started going back to the upside. Okay, so we now have price breaking above this level to give us this new level. Okay, we've not had that much of a retracement. We've not had that much of a retracement. We've not really had that much of a retracement at all. So indices, US 100 is still in that upward push. So any moment, because price has broken above the high to give us a new high, we are still waiting for retracement. Retracement, I use my moving average. I want to see price going below moving average for a while for that retracement. Every single time, price in an uptrend, I want to see price go below moving average first to do that retracement, then go back above before we start to buy. So this is too small of a retracement. Like this one, although on our 1 hour time frame, it might look significant, but in the long run, it is too small of a retracement. So I'm afraid to keep buying US 100 until I see some good retracement. And I prefer to do more buy because price is in an uptrend, consistent uptrend. It's just the downtrend might be very sharp, very fast, massive, but it doesn't take too long. Maybe at best you can have a week or two, most times before price returns up. And when it returns up, it goes for a long time. Now, price recently created a new high. We're expecting retracement before it does. So, but irrespective, we can look out for areas of liquidity, right? Now, like I said, these are points where you can possibly take trades. So when price was doing retracement, let's say it was coming down, this is a good area of liquidity, which price finally came to mitigate. Okay, it finally came here to mitigate. All right, and it respected this one. If price is to keep coming down, which I don't want it to, but if at all it will, it's going to be seriously massive all the way here. If you see US 100 like pulling down massively, that kind of pull down that can blow accounts. Yes, these are areas where you're expecting. So what you will do is you will save yourself from that drop. You won't be in the market because you know to an extent the next level that price is supposed to get. So I wouldn't be buying US 100 until price comes back down. So there are three areas, 1, 2. So I prefer this area like this. If it comes here, like I said, I can never be right. If it fails here, I will look to take me out, stop loss, then I attack it again from this level. So let me just quickly drop my number. Unfortunately, I have another meeting by 9, which is already 9. I regret that we don't have enough time. So the number is, please, if you can take it down so we can reach out to me. I'll let you know further. 00 265 82493. 00265829493 Victor. So please just get it, and we'll meet again next week Wednesday. But before then, we can schedule a market structure class.
Please, your number, the number again, please. Please, number again, please. Number again.
080 265 82493. 00265 82493 Victor. Also, your account managers can also reach out to you, letting you know when they're having some special classes. Just make sure you fund your accounts. That's my all right. Thank you so much. Looking forward to seeing you another time.